Hello everyone and welcome back to That Investing channel. Today I want to show you guys my £41,000 portfolio I hold in my stocks and shares ISA on Trading 212. I hold just 10 companies and we're going to be talking about all of them, along with my overall return for the month of August. I'm going to talk through what positions I've been adding to lately, along with my newest holding, which I recently made a video on. So feel free to check that one out. This can be followed by what positions in my portfolio I think are looking reasonably valued right now. So stick around for that. And as always, if you enjoy this sort of update and how I talk about stocks, then don't forget to subscribe to the channel. So as we can see, we've hit a new milestone, and that was at £41,000 in invested stocks held in our stocks and shares ISA, which is very impressive and just great. I shouldn't brag about it because I bragged about getting £40,000 invested, and then of course the market tanked considerably. So I shouldn't do it again, but I'm bragging anyway. So I've got around £38,843 invested, and around 2,200 or so of that pounds is from a return. So that gives us that 41k. And we've got around 5.75% in unrealised gains on this overall amount. Now you can see over the past 3 months this has gone up considerably from around 19k or so. So a lot of that has been recently invested. And as we can see, as it's edged up, we've actually reached a point where we was negative at some points, and now we're up considerably from those sort of points. And over the last month or so, as that's actually gone up by quite a bit, we can see it sits around about 3.8%. It fluctuates quite a bit as I add cash to these positions because the contributions are considerable, and that actually has quite a weighting and hit on the overall return of the portfolio. So we're sacrificing a bit of that, look like percentages if we like. And in terms of amount invested for this year and stuff like that, so we've invested around £17,572 this year, and that sits at around about 2,400 or so pounds I can invest in this stocks and shares ISA tax free until I can't invest anymore until April 2025. I'm dreading that day because I'll be investing a lot of money in the stock market that day. Probably not in individual stocks. I'll hold it for a bit and then we'll go from there. But I've only got about 2k and a bit K to play with this year. So first on the list is my biggest position, and that is of course Amazon. Now we have 74 shares, which is around about £10,000 in overall value, and we're currently down around about 2.29% in the overall position. Now if we take a look at the actual gains and losses, we're actually up on the position, but the FX impact is killing us. Essentially, FX impact is the return of pound to dollars, and dollars is quite low at the moment, and when we invested the pound was that much different from what it is now. So that's why we see this £300 deduction. We're actually up about 100 quid on the position. But that's just the reality of investing in these stocks because they are held in dollars. Now, if we take a look at the position and how it's sort of developed, we can see that generally over this sort of period of time, I was buying around the $155 mark. That's when I first started investing in Amazon. It went up, and we sort of invested a bit more at 186. As it came down to around about 161, well, it actually went lower than that, but I was invested around 161 or so when it went on this massive dip after reporting earnings, and now we're back up to the realm of being almost flat in the position and actually up a bit if it wasn't for that FX impact. Now, I love Amazon. The reason I've got this as a position of about 24.5%, and I expect that to be sitting around 30% in the future. I just love this company. I think it's doing really well, and actually the share price is massively still slightly on the undervalued side, I would have said, and I'll talk about that more when I talk about the stocks that maybe are sitting at fair valuations. But that's my Amazon position. I'm fine with it being about 25% of the portfolio. I really like the company. I really think the certain things that are happening at Amazon with AWS and a few other things are very promising. So I like that one. Then we can take a look at Visa. Now, Visa is a position that is actually flat. It's about 3.4 shares, and it's got about an overall value sitting about £7,172 or so. And this is up about £59. But if we actually look at the FX and stuff like that, we can see this position is actually up considerably more, about £300, but the FX is bad for this one as well. And actually, Visa has been doing very well in the past week or so, up around 3.3%, and the month about 4%. Now, I was buying around this sort of level. I actually bought around 233 and then carried on buying up to this point. And sort of left it after that, but I added heavily just around here, so it sort of brought that share price up overall. Now, I'm not too concerned. I actually really like Visa for the future in terms of its dividend growth and a few other things. I really want this to be a core position in my sort of portfolio, and it sits around 17.46% now, which is actually really nice. I want it to sit around that 20% mark. But I love the things that are going on with Visa. I love the scalability of the business model and really like this one for the future. Now, let's take a look at Salesforce, because that is probably my third largest holding, I believe. If we take a look at sort of how this position has started, so I've got 32 shares now. This has varied a bit. I've been adding to this position, not so much lately, but I was adding to the position when it went on this big dip around here, around the $240 to $230 mark. So, which is actually quite nice. So now it's bounced back a little bit from that, but after its earnings, which actually I thought were very good, it actually sold off a little bit. So we can see in the past week it's down about 4.39%, and I just couldn't really tell you why. It traded up initially after its earnings, which I read as being quite good, but then it dipped loads. So I don't know why. I don't know necessarily if the market isn't seeing the revenue growth that it likes to see. Obviously it was down a little bit. And the guidance wasn't the most amazing, but in terms of what you're getting with this company and historically what it's traded at, it's just really still undervalued. So I'm still liking this one. If it goes on a dip similar to this before, I will add more. The position is sitting around £6,100 or so. I'm down almost pretty much flat, to be fair, because as we can see, the FX impact is still very bad on this one. So I'm pretty much flat on the position. But in terms of overall weighting, it's sitting around 15%, and I don't mind that for Salesforce. I don't want it to be a core holding. I do like it, but I see it as massively still undervalued. So when it gets down to this $230 mark again, I'll probably add more. I just lower the cost basis, because I can't avoid just putting money into a really undervalued stock that I could believe in considerably. I've got some reservations about the management team, but on the whole, I still really like the business, the company, and the overall sort of business strategy that this company is. Really tech focused. The stock-based compensation is trending down in the past quarters, really good to see. And I hope they deliver on this promise of a bit more profitability and rewarding shareholders over the what their track record has been of just heavy acquisitions. I don't really want to see those sort of acquisitions. I don't think Salesforce needs to. And I think it would be great if they could reward shareholders, as I think they can with this free cash flow yield they're now currently providing. And if we move on now to my fourth, I think it's probably VICI. Yeah, so VICI sits at around about 150 shares, and this position has actually done really well in the past couple of weeks or so. So we've got 150 shares, around £3,854 invested. Now that is actually up by about 10%. £357 or so, and we can see over the past week it's actually done very well. It's up around 2.55%, and for the month it's actually up around 7.93%, which is just amazing. And I was adding to this position sitting around about this $27 mark, as I thought it was massively undervalued. I think the intrinsic value sits around $37, $36, and $33.74 still isn't a bad price to trade for VICI. But as we can see, I was buying here. I bought initially up here about $31 and have just trended down with my costs per share. And as we can see, this FX impact is still negatively affecting us, down by about 3.53% because of how well the pound is performing against the dollar. Now, this position is still one that I really like, mainly because of the overall dividend yield. I was buying it when it was about 6% dividend yield. I'd have to do the actual maths on my yield on cost, which is probably sitting close to around about 6 to 7%. So I really like this one. I think it's going to perform very well, and I think the dividend growth in the future is still very nice. I'm not a massive fan of REITs. I don't like the dilution of shares that they do to leverage against creating money, because it actually dilutes the shareholder. But they do reward shareholders, and the actual AFO per share is going up. So I still like VICI and how it's performing and its runway for growth. It'll just be whether REITs perform well in the future for me. Now, what's next? We've got Mercado Libre. Now, Mercado's just done amazing, and part of me wishes I added more, but part of me was actually quite conservative, because Mercado is actually one that is outside of the US and it's outside of the UK, so I'm a little more reserved on it, but it's actually doing very well. Now, I've got 2.3 shares, and the overall shares a standard value of about £3,600 or so, and we're up about £690, around 23.6%. Now, the actual FX impact is affecting it quite a bit. We're actually up about 26%, but it's just performed massively well. And I bought before their earnings report around $1,617 per share, and it sits now around about $2,000 per share, which I don't think is a terrible price for Mercado even now, because their earnings report was just amazing. It did really well. Revenue growth was off the charts as normal, and their overall profitability is massively improving. They started performing really well in Argentina, so that was great to see. And I just love the business overall. It's the younger sort of Amazon, with its revenue growth still smashing it, but their actual overall profitability, because of the fintech space, is improving very well. So this overall part of the portfolio sits around 8.79%. VICI sits at about 9.38%. This one doesn't pay a dividend. These ones do, and Amazon, of course, doesn't. So we're sort of weighing up dividend growth in this portfolio. It started off as a dividend growth portfolio and has now developed a little bit more to a growth and dividend growth portfolio, because I just couldn't avoid investing in companies like Mercado Libre. They're just amazing in terms of the sort of profit and overall growth that they can provide to my portfolio. So I couldn't discount them overall. But I really like Mercado Libre. I'm holding my shares despite this recent run up. I'm not planning on selling out of it, because I think it will continue to perform very well. I don't see myself adding at the moment. If it went on a significant dip back to its original share price, sure, but I don't feel a need to add to this position. I added heavily when I thought it was undervalued. It's still fairly valued, I would have said now, but yeah, I don't see myself necessarily needing to add to it. Then we get to Brookfield Corporation. Now, this is one I bought when I sold United Health Group about a month or so, and since that time it's actually performed incredibly well. Now, I think that's due to more macro trends of people wanting to invest in dividend-based stocks and stocks that they think are going to do well when interest rates cut. That wasn't my overall reason to invest in this company. But we have 88 shares at around about £3,400 or so, with about 9.24% return on the overall position, up around £287. Now, if we look at that overall gain, we can see, again, FX impact down about 3%. So we're actually up about 12% on the position overall. If I were lived in the US, this overall return would probably look a little better. But as we can see, I sort of bought around the $44 mark. As I said before, this was before earnings again. I really liked the company at this sort of $44 mark. I still don't think it's massively, I don't think it's overvalued. In fact, I think it's probably still undervalued. And the company would certainly say it is. Their distributable earning growth is doing very well. I hope it picks up a little bit more in the coming years, especially in BAM, their Brookfield Asset Management Group, which has underperformed a little bit this year. I don't think that that's not what they expected, but they have just grown their wealth solutions side of the business very well in the past. So I would like to see that growth pick up as the later part of the year, as they have originally said that would. So it now sits at $50.32, and we can see over the past 3 months, it's actually up about 15.7%. Obviously, as they've reported earnings, they went up a lot on that day. So it's actually really good to see. If this one returned back down to around about $48 per share or below, I'd probably add to it, as that's the sort of bar I was sort of looking at. But I couldn't add to this one because it's gone on a bit of a tear recently, and I actually added to another company, which I'll talk about a little bit more. Now, if we move on to S&P Global, actually, if I talk about Brookfield just quickly again, it's about 8.28% of the overall portfolio. I'm fine with that. I'd like it to sit actually higher, around about 15 to 20%, because I really believe in the business. The management team is just amazing, and I think the company really knows what it's doing in terms of growing a portfolio of assets. So I get really excited thinking about this one. I really liked looking into this company and keeping up with their research. So I hope this is a position that continues to grow for me. I want to add more to it, but it just went on a massive tear after I bought into it. And now I'm sort of waiting to see how the dust settles. So we'll see what happens next. S&P Global is another one that I've been invested in for a bit of a while now. So I have 7 shares at a cost basis around about, what are we sitting at? Around about $419 per share. And it's now sitting at $522. Which gives us an overall value sitting around £2,789, and around about £434 of that is in gains, upwards of about 18%. Now we can see FX impacts really affecting this one. It's down almost 5% from what we were originally investing in. And it's just the basic concept of investing quite a bit of money in terms of pounds. But I really like the company. It's still only a market cap of about 160 billion, which I think is still very small for how this company could grow. Now, it's gone up massively from when I invested in it. Ironically enough, when I thought it was around $430 or so, I actually thought, well, do you know what? It's not massively undervalued. But now I'm thinking it's getting towards sort of overvaluation levels for me. I think that it's an amazing business and a very good dividend growth company. It's got an amazing business model in terms of its rating business. Its analytics business is growing very well as well. So I really like the business and its scalability, because the ratings industry is just effectively a sort of oligopoly with the likes of Fitch and Moody's. So I really like S&P Global as a core holding. It currently only sits around about 6.79%. And of course, I wish I invested more with it being up as it is now. But with how I think it's currently valued, I don't see as massive amounts of upside over the coming years. So I won't be adding to this one unless it goes on a significant dip. But I really like the company. I would happy have it having a higher allocation in my portfolio, but I'm more than happy to hold it, even though I think it's currently slightly overvalued. If we take a look at my next one, which will be Texas Roadhouse. So Texas Roadhouse is just an amazing performer for us, probably our best performer overall. We have about 18.29 shares at an overall value sitting around £2,351, and that is upwards of about £640 in gains, on the upside about 37%. It's actually up around about 40% once we take out FX impact, and we have a current share price that sits around $168, and we was actually buying around the $90 range, which is just mental, but we actually have an overall average share price around $118 per share. What's funny about this one is I was investing this in my taxable account when it was around $92. I then sold the shares when I moved them all over to my stocks and shares ISA instead of my taxable account, and that's why we see this $118 current share price. So I've actually made a lot more out of Texas Roadhouse than these unrealised gains. I've actually got a realised gain of sitting around £300 more than this, I would have said. So I really like that. I think it's pretty amazing. I think Texas Roadhouse has performed very well. Not really in the past months or so, about 3 months. It's only actually sat down about 2.25%. But we look at over the year, wow, it's just up 61%. And that's massively because it's massively overperformed in its earnings and profitability. When I was investing in it, they were talking about food and sort of inflation on meat prices massively impacting this overall operating margin of Texas Roadhouse, and that just didn't happen. Texas Roadhouse continued to perform very well. Their stores continue to increase in overall profitability, and they've actually just continued to open regular chains. So I think this is an amazing sort of mid-cap company, mid to small cap even, around about 11.25 billion market cap, and I was buying around the $8 billion market cap. So I really like the position, how it's performed. I don't think I need to sell out this one. I want to hold it for the long term, as it is an amazing dividend grower as well, and I massively believe that this company will perform and continue to outperform probably the S&P 500. So I'll hold it for now. And then we come to my newest holding, which is Cheniere Energy. Now, I talked a lot about this one in my most recent video, so please feel free to give that one a watch. We have 7 shares at a share count of around about $184 as an average share price. And the current price is sitting around $185. So we're around flat on the position. The overall value is sitting around £1,000. And as we can see, we've actually invested in this one at a 52-week high. So we can see in the past 3 months, it's actually up 17.5%. And we've added to this position. So well, you're thinking, why? Why would we do that? Now, my main reasons are covered in my previous video, but I will touch upon them here. So when it was sitting around $155 per share, they have just recently had some amazing earnings, and they've recently agreed a long-term agreement with Galp. Now, the long-term agreement was for 0.5 metric tons of natural gas liquefaction. So LNG is what they produce, as well as being the ticker symbol name, which is a fair amount of irony. But essentially, this company is really set to outperform, in my opinion. Now, obviously, it's just my opinion. I'm open to being wrong. That's why I've not overly invested in this one. It only sits around about 2.46% of the portfolio, so it's a really small amount. But I just really like the earnings report Q2. It did really well. To cover it simply, they increased their share buyback program by about $4 billion. They announced they were going to raise the dividend by about 15% in Q3. So they haven't actually done that yet, but they probably will. They announced they were ahead of construction again, and on budget for Corpus Chinsteri. I keep just butchering that, so probably someone's going to tell me off for that. But yeah, generally speaking, I really like its construction being ahead of schedule. It's going to massively increase their production of LNG, so liquefied natural gas, in the future. And natural gas prices are actually at their lowest point. So I think Cheniere Energy is going to have a few Q3 and Q4 are probably going to go very well for them if their construction can remain very well on their projects. And we're going to see the first LNG shipments start to go out at the end of 2024. And if they finish their construction on these mid-sized trains, I think they've produced about 7 of them at Corpus Chinsteri, then I think it's just gonna massively perform very well. So I really like the capital allocation at the company as well. So we're actually seeing they've got a 2020 vision program, I think, that they talk about, which is essentially where they're planning on paying off long-term debt, increasing the value on their balance sheet, increasing their dividends they've announced by 15% in Q3 of 2024 and 10% in the concurrent years, and of course their share buyback program. They bought back around about 10% of their overall share count in the past 3 years. They plan on doing that again for the next 2 years, I think 3 years, 2027 I said they'd do it by. So I think that's a massive amount, and we can see that it's performed very well over the past, so in October 2020 they sat at $47 per share. They now sit at $185 per share. And that just shows the massive value that they can give to shareholders, and that's why the share count has gone up so much. So I think there's massive amounts of upside for this stock. I think I counted it for about over 70% if they can produce their distributable free cash flow in the same way that they've described in their earnings reports. And they've been actually very conservative in their earnings call. So I've got massive hopes for this one. How it will do in the short term, I don't know. I would expect it to probably go up, but anyone's a guess for me. It doesn't sit a massive dividend yield. I think it sits at around about, so it's sitting around 1%. Now, I don't really mind because the overall growth I'm getting for this portfolio is very good. And the market cap is sitting around about $41 billion, which makes it a mid-cap. And I was a bit underrepresented in the mid-caps. I did a video talking about Warren Buffett's talking about mid-cap companies outperforming. And I actually started looking at holdings that I thought were maybe a bit better for that. Because I've got a lot of mega-cap companies. I don't need to invest in them. If I see that the cash and reward to risk is actually higher in these mid-cap companies, I'm happy to invest. I'll maybe just do it on a smaller scale until I get a bit of faith in my own research process. And then finally, we've got Microsoft. Now, Microsoft has performed very well for me, as it has for others. I've only got 2 shares, and I still continue to hold them because I haven't found anywhere that's going to return to me as well as what Microsoft has so far. It's gone down quite a bit from what it was before. If we take a look at it over the past 3 months, it's pretty much flat, but it was up about $467 per share, and now it sits at about $417 per share. I've got about £600 in Microsoft, and it's up by about £121 or so. And we can see the FX impacts affecting this one as well as it does all my other stocks. But yeah, I just really like the company. I've got a intrinsic value on it. It just sits around about about $400. And with my margin of safety, I actually really liked it around $330. Mainly because it gave me about 20% margin of safety on Microsoft, which is just almost unheard of. So I really missed the boat on this one. I should have been investing into it heavily. I was put off by the fact I think it was a 52-week high or something similar to it at the time. And now it's skyrocketed, and that serves me right. So I'll continue to hold it. Its weighting is almost 1.5%, as you can see here. So it's tiny. But yeah, I can't bring myself to sell it. So we'll see what happens in the future. And in terms of how this overall portfolio is developing, I just really like my stocks at the moment. As we can see, the overall return's doing fine. In terms of individual stocks, I'm flat on Amazon. We've got the likes of Salesforce, I'm relatively flat on. The other ones are performing fairly well. Visa's pretty much flat. So my largest 3 holdings, Amazon with £10,000, Salesforce at £6,000, and Visa at £7,000 are all pretty much flat, which I find quite ironic because I'm actually was hoping to sort of even out my distribution into certain portfolio stocks. I wanted to add to Brookfield Corp. Can't really do that now because it's gone up by quite a bit. I wanted to add to Microsoft. Can't really do that. It's gone up by quite a bit, and I'm seeing not much upside on that one. So I think it's quite funny because I'm going to continue to add to the stocks that I think are actually undervalued right now, which I think Amazon is still undervalued. I was buying around the $180 mark. I still like the share price despite its recent run up over the past month or so. Oh, I was going to say month or so. It's actually up from the lows of about $161, so obviously $178 now. So it's up around about 8% or so from this sort of low point. But I really like the shares at the moment. I'll probably add to Amazon. I added a little bit over the past month or so, but not massive amounts. Mainly I went towards this Cheniere Energy buy, mainly because I want to see what happens with this one. I just saw massive cash flow yield and not massive amounts of risk from when I was looking into investing in this LNG. So I'm actually hopeful for this one for the future. But the stocks that I think are actually undervalued right now in my portfolio are Cheniere Energy, as I talked about in my previous video. Feel free to take a look at that. I value the company there. I talk about a few different bits, so feel free to take a look at it. We've got the likes of Salesforce. I think Salesforce is still undervalued, despite its more recent sort of troubles. I don't know why. I know people didn't really like the earnings report. I did, so maybe I'm biased. I've got a high position in the portfolio, so don't buy it based off what I'm saying. Take a look at it yourself, but I'm more than happy to maybe add to this position as it comes down below my share count, really, because my share price, sorry. So I'll see how this one performs, but I could see myself adding to Salesforce in the coming month or so. What else? I don't know. I think Visa is coming towards fairly valued now with its more recent run up over the past month by about 4%. I thought it was undervalued, sitting around $350, $59 per share. That's where I was buying it. I don't think it's overvalued now, so I won't put off buying it now. But I don't think it's massively undervalued as it was a little bit previously when it was down at these sort of levels, 233, which is when I was sort of buying into it. I don't think Brookfield's massively undervalued, but I don't think it's. I think it's fairly valued. So the main ones I would say is probably the likes of Salesforce and Amazon and Cheniere Energy. Now, people may disagree, but that's just from my looking at it. And obviously, I've got a significant amount of money behind these positions, so maybe I'm biased. But these are the positions I will probably add to. When I add a bit more money to it, maybe when I get paid next month, I'll probably look to add to Amazon if it's still around this level. I'll probably look to add to Salesforce if it drops below my current share sort of average share count. So that's just me. I'll probably look to maybe add a little bit more to Cheniere Energy. I don't want to go above 5% in its allocation because it's one I've picked out myself when looking at it and a few other things. And I don't know, like, it's quite nerve-wracking to do something on your own and look at a stock in a bit more detail. So we'll see how that one goes. But I'm hopeful for the future. But as always, thanks for watching, guys. I do appreciate it, and I'll catch you all in the next one.